So in today's video, I've got something truly captivating in store for you. I recently found a beautiful trade setup on AUD/USD using some groundbreaking ICT concept, and the outcome of the trade was amazing. Hello traders, what's good? It's Romak out here. Welcome back to my YouTube channel. If you're new to this channel, do well to subscribe, hit the bell icon and turn on post notification so you get notified anytime I post a video content like this. And also smash the like button so this video can get to other traders as well. Let the algorithm do its shit, you get me? Before I dive into the details, let me quickly remind you why ICT concept have been turning heads in the trading community. ICT concept is a renowned approach developed by the man himself, Michael J. Huddleston. His unique methodology blends technical analysis, market structure, institutional knowledge, creating a very powerful framework for consistent trading success. You get me? So ICT's concept doesn't just tell you to trade a pattern for the pattern's sake. ICT's concept teaches you price action, where you can literally trade without having all those lines or without having noise on your chart. It's all pure naked price action, you get me? So you don't have to keep drawing lines on your charts, you don't have to draw boxes on your chart and things like that. So ICT's concepts helps you understand price action better. So enough of ICT's concept, let's dive deep into the AUD/USD trade. I think I like it without the cap, so let's head over to the chart. Quick one. Alright, so this is the higher time frame chart. First, you want to go from the higher time frame to the lower time frame before you can take any trade setup. Although we have a whole lot of people that just trade one time frame, but for me, I prefer to go on the higher time frame to know what the higher time frame is saying before I can take a trade setup. So on the channel, I had marked out this level for price to come into this level, give some reactions, give my setup at some point, then drop. You get me? So this is not to focus on this level. Where I want to take your focus to is here on price action before price tapped into the first fair value gap. If you see here on the 4-hour time frame, you can see that this is a bullish fair value gap. This is a bullish 4-hour fair value gap before price reached into the target. Remember the video on directional bias that I share on the Telegram channel for free was for you to understand directional bias. You need to ask yourself, where is price coming from, where is price currently at, and where is price going to. So it was on a Wednesday. I'm going to take my period separator and I'm going to mark Wednesday out. It was a Wednesday trade. Yep, this is it. So from here up to this level here, where price got into this level, I took a buy on AUD/USD. Now, why did I take this buy? One, I had a draw on liquidity. I had a level on the higher time frame where price could go to. Let me show you that level. Let me show you guys that level once more. This is that level. This is the first level, this level here. So I wanted price to move from here into this fair value gap here, the 4-hour fair value gap. You get me? The fair value gap is from here, extended from here, this space here. Let me change this so that you can see the gap well. So the fair value gap was from here. Extend this. So the fair value gap was from this space here, and then I wanted price to get there. So I went down to the 15-minute time frame. Now, as you can see on the 15-minute time frame, and let's mark Wednesday, because it was on a Wednesday that I took the trade. Let's mark Wednesday on the chart. This is it. Yep, here we go. Wednesday during London session. This is what happened. I'm going to draw the setup for you to understand. Here is a very simple ICT 2022 YouTube mentorship setup that you can use to, make some bucks from the market, you get me? So the setup forms after liquidity has been taken in the market. That's just it. You get me? After liquidity has been taken in the market, that's where you see the setup. So what I waited for is for the lows to be grabbed. You get me? Break market structure and then tap into some sort of fair value gap, and then price moves higher. You get me? So the low grabs, this should be a clean, this should serve as a market structure here. Yep, that's it. So grabs low, break market structure here, come back, tap into fair value gap, and then move price higher. So now this is what I saw on the chart here. Remember, the draw on liquidity is up here, so you want price to be bullish, right? So now this is what happened. Now this is Asian session low. Now one of the places where you will find this setup most often is during previous sessions. Like if you are in London session, you expect Asian session range to be broken. If you are in New York session, you expect London session low to be taken before you start looking for buys. And that's how it is. Now previous day highs, previous day lows, previous week high, previous week low, these are the levels that you expect this setup to form. You get me? So this is the 15-minute time frame. Once I saw the graph of Asian session, I started expecting bullish price action. I scaled lower to the 5-minute chart to start hunting for the setup. Now this is the 5-minute chart. You can see that after this low was grabbed, it went high, took out market structure here that tapped into a fair value gap. This is the ITH that I talked about on my how to know a break of market structure video. The link is in the description. You can check the video out. So once you see a high that tapped into a fair value gap like this being violated, that signifies a valid break of market structure. So although this break of market structure is not clean now, what you can do is to scale lower to look for a cleaner one. You get me? So it's not cleaner here on the 5-minute chart, but it was cleaner on the 1-minute chart and the 3-minute chart. So the main focus here on the 5-minute, remember, look at how I went down from my higher time frame. Now the 15-minute, I use it to check out for liquidity grabs. You get me? After the liquidity grab, I didn't spot out any fair value gaps on the 15 minutes. So in order for you not to miss your trade, you need to scale lower to start hunting for your fair value gap. So when I came to the 5-minute chart, I saw a fair value gap, and this was it. The high of this candle and the low of this candle, the gap in between here, the distance in between them, is the fair value gap. Remember, the fair value gap consists of 3 candlesticks, 1, 2, and 3, and the fair value gap normally forms on the second candlestick. So that's where I marked out my level for my entry. You get me? Remember, it's storyline. Once the low is grabbed, once this is grabbed, you wait for clean break of market structure and ITH or ITL, then you mark out your fair value gap, and then you wait for price to come in to trigger you. You get me? Your stop loss will be below the lows. You get me? Just to show you the cleaner break of market structure, I'm going to start scaling lower to the 3 minutes, 1 minute for you to just see how you could do this. This is it. This is the market structure shift on the 3-minute time frame. That was the shift on this candle. That was the shift on this candle. See, price tapped into the fair value gap and then didn't break market structure, and it went back high to break it. So this is an intermediate term high. This is an ITH. This is how you know a valid break of market structure, a high that tapped into a fair value gap. You get me? So as you can see also on the 3 minutes, we have the fair value gap also on the 3 minutes. So once you see a fair value gap from the 5 minutes or from the 15 minutes, the fair value gap still shows on the 5 minutes, the fair value gap still shows on the 3 minutes and 1 minute. That is a high probability fair value gap. And as you can see, we smashed TPs here. Where will your TP be? A whole lot of people know how to take beautiful entries and they don't have an exit plan in the market. To me, your exit is more important than your entry, because without your exit, you can't take out money, you can't bag some dollars out of the market. You get me? So where did I exit this trade? As you can see here on the chart, this is the Asian high, as you can see, and that's where I took my profit. A clean 1:4 setup on AUD USD. Remember, we had a higher time frame target from the 4 hours, that fair value gap from the 4 hours. You can basically keep your targets here, but I prefer you keep your target on the Asian high. Since the liquidity was grabbed on the Asian low, you expect after the Asian low is being grabbed, what's next? The Asian high. Get me? So Asian low being grabbed, Asian high being grabbed. So if you took a trade setup from the previous day low, like let's say the previous day low was grabbed, where you should expect your take profit should be on the previous day high, and then you start taking partials maybe from the previous session highs and things like that. So as you can see, this is how I managed my trade. On this first high here, I moved my stop loss to break even, because this is a high, and you know, normally you don't know if this is going to be served as liquidity before price keeps going down again. Once price broke this trade went to break even. You should break even your trade once the recent high has been grabbed. And now this other high here, you know, this series of highs here, these are relative equal highs here, so you want to be taking partial profit there, and then you want to keep for your full take profit at the Asian high. And that was the trade setup I found on AUD USD on Wednesday this week. I hope you enjoyed enjoyed the insights, strategies, and lessons shared in this video. If you found this video valuable and you want to stay up there with more exciting forex content, don't forget to subscribe to my channel and smash that like button for your boy. Hit that notification bell. By doing so, you'll never miss out on any of my future videos. Until next time, peace out, guys.